Thank you for tuning in to Macro View Television and welcome to a brand new edition of Taiwan Outlook, the program that presents the people and their stories on Taiwan. I'm your host, Ray Guo. Since today is January 1st, 2016, on behalf of the entire production team of Taiwan Outlook, I would like to wish our viewers all the best in the new year, in 2016. And we will continue our program today by asking you that what do you expect on global economy in the year 2016? Because we certainly had some ups and downs in the year 2015. What can we expect in the new year? We're going to find out on today's program because we're delighted to have Mr. John Brebeck, who's currently a managing director of Peacefield Limited, also a very good friend of mine, to be our special guest on the program to give us his views about what to expect in the year ahead. Welcome to our program, John.
Thank you, Ray. Happy New Year.
Happy New Year to you.
This is a great way to start the new year on this fine afternoon.
Okay. And John, let me ask you, we certainly had many ups and downs in the year 2015. And what were some of the factors that you could, identify for us, especially in the global equity market, that caused the fluctuations?
There were a lot of uncertainties in the economy this year.
Okay.
And the largest of them being, would Janet Yellen raise rates or not?
Yes.
And so I think that was, people were trying to properly discount what the effect of a rising rate environment would have on the stock market.
Okay.
But also, as the year went on, it became increasingly clear that the Chinese economy was slowing. And since China is such an important engine of global growth, people got nervous. But you also had a precipitous fall in commodity prices.
Okay.
And people took that as an indication that the global economy was slowing. And I think another thing that was very important that perhaps people didn't talk quite enough about is that equity markets had been rising for 3 straight years, maybe 4, ever since really 2010. And so I think, some volatility in stock prices was not a big surprise.
Okay. And given the fact that, we had some serious fluctuations in markets like, China and Japan, so does that really mean that not only China's economy is slowing down, but also the recovery, the much anticipated recovery in Western Europe and also Japan remains very fragile? Is that the correct assessment?
I think fragile, yes, but stable.
Okay.
And what I see is I don't see any big surprises knocking us back into a crisis situation.
No.
The interesting thing is, with all the banks of the world printing currency and increasing government debt, the systemic level of risk rises with each year. But luckily, and you have to give credit to Bernanke for this, he was successful in spurring a recovery. And so most economists are, in fact, the consensus for next year for global GDP growth is acceleration, not slowing, even with China slowing.
Okay. And John, let me ask you, I mean, a lot of people also do not talk much about the non-economic factors that have had impact on global economy. For example, the instability in the Middle East and also, the fight against global terrorism. Do you anticipate that these non-economic factors will continue in the new year in 2016?
Absolutely.
Okay.
In some ways, they could get worse. What we have right now is when you spur recovery by basically really the recovery in global markets was spurred by an easy money policy. What that favors is the haves, and it doesn't favor the have-nots. So, for example, it's no surprise that you see both Japan and the U.S. raising the minimum wage. And in countries that do not do a good job of their public relations and do not sort of at least try and look like they're trying to help the sort of less rich half of the population, you're going to see a lot of problems. And unfortunately, that's one of the things, and it's only one of the things that's causing the dislocations in the Middle East is there's enough people who don't have it good that they become very fertile recruiting grounds for terrorists.
Yes. Yeah.
So, but the other thing is that, I mean, the causes behind terrorism go very, very deep. It's got religious reasons. It goes back to the colonial times.
Yes. Cultural reasons.
Yeah.
Yes.
And what needs to happen in those countries is there needs to be a stable system of government that meets the people's needs suitably enough that they are happy with it.
Okay.
And, you know, if you look back at the history of Europe, we don't have to look back too far to see world wars and the 30 Years' War. And so it could take a long, long time to settle what's going on in the Middle East, unfortunately.
Yes. And, John, another factor that you mentioned earlier is the slowdown in the Chinese economy. I don't think many people expected it, this, at the beginning of 2015, especially in the stock markets in China at the beginning of the year, at least, for the first quarter, was going up. It was, getting out of hand, spiraling, increasing by, 100 points, 200 points every day, and gotten to a point when we had the, sort of like a meltdown in, June, July, when the Shanghai Composite Index dropped over 2,000 points, and not just one day, but of course over a period of weeks. And given the fact that China is now continuing its transformation from once being the world's factory into hopefully the world's marketplace, do you think the fluctuations that we saw in 2015 will likely continue in 2016?
In China, I wouldn't expect as much fluctuation. I would expect a market. It's probably going to be a year. This year is probably going to be a year of stock-specific performance.
All right.
What because as I look back at 2015, you had a government that I think wanted to give a certain feel-good factor.
Okay.
And you probably remember the old days in the Taiwan market, where the most important thing to get right was what was the government's attitude towards the stock market.
Yes.
And it was clear that the government wanted the stock market to go up, and so everybody joined the party.
Yes.
But
jump on the bandwagon.
Yeah. Fortunately, it's kind of hard to control on the downside, and that's what they. But it's pretty clear in the first half that the Chinese economy was slowing, and so you had this dichotomy between a rise early in the year, rising stock market, but all these signals that the economy was cooling down faster than people expected. And so I think, and then another thing is the devaluation of the RMB.
Okay.
The way it was done without warning, people left to interpret why, and actually the real reason was, and they could have said this out when they did it, it would have been better, but they were trying to achieve the establishment of their RMB as a reserve currency.
Of course.
Right, and they've done that.
Yeah, they got it.
But that created incredible turbulence throughout the world. The NT dollar goes from 30 to 33, and people for a while didn't know exactly how to look at that.
What to anticipate. Yeah. Finally, let's talk about the U.S. economy. Of course, it's on the recovery path, and things are looking cautiously optimistic. What's your view on 2016 for the U.S. economy?
Oh, continue. I mean, the U.S. I think is actually one of the strongest economies in the world right now. And I think it comes from rule of law, an economy that has a high degree of transparency.
Precisely.
And then our ability to attract very talented people with knowledge in the STEM areas from India, Taiwan, China, Korea into the U.S. But there's this spirit of innovation, and then the regulations of the government help enable that innovation. Additionally, this is something that I think is a very interesting subject between Asia and, say, the EU and the U.S. Is the U.S. Has a fairly liberal immigration policy, which results in at least 1 to 2% population growth. even though our birth rate, I think, is below replacement. So it's interesting that you see Japan and China both now realizing that this is something where they have to make an adjustment. I don't see any adjustments being made on immigration, but they are encouraging the birth rate to increase. And Japan has even gone to the point of addressing the people's concerns. So one of the things, Abenomics 2 has been enacted this year. And one of the key aspects of the government stimulation measures is they're going to spend on daycare centers for children, and they're going to subsidize
parents.
Care for the elderly. And that's a way of saying, hey, go ahead, spend your money, because we get you covered.
Okay, but one non-economic factor that's looming large for the U.S. economy is the upcoming November presidential election. All right, but as the case in Taiwan, whenever you have an island-wide election, then a lot of people would, tend to be more conservative with their spending, adopting a wait-and-see attitude. Do you anticipate the same thing with the U.S. consumers, even though the economy, all the numbers are showing, is on the recovery path? But do you think that could cause some, occasional hiccups along the way?
Good question. So the U.S. consumer has not gone back to their spendthrift ways of pre-2008, right? But it's interesting. If you look at the University of Michigan Consumer Sentiment Survey, in 2015, it was the highest on average of any year in the past 5 years. And the same goes for Europe. So consumer sentiment is okay. Let's just say it's okay. And for corporations, these are the people we need to encourage to spend.
Exactly, to invest.
Now, Japan's doing that. They cut the corporate tax rate, and they're hoping that leads to more investment. The U.S. has different things going on because they're actually trying to convince companies to stay and stay tax domiciled. But I think, generally speaking, I don't see any big downside to consumer spending in 2016.
Good.
The biggest negative, and this is a global problem, is the so-called M-shaped society where the middle class is evaporating before our eyes.
All right. Let's now get down to, first, what do you do as an MD for the for Peacefield Limited? And you're now primarily raising money for, some of the startups, early stage and mid-stage companies. And what are some of the adjustments that you had to make? Because we know that you used to, be part of the Yuanda, investment corporation, and then you used to be the, chief equity strategist and also head of research of a research team that focuses exclusively on publicly listed companies. And this is very different. Tell us about it.
There's a lot of big differences.
Yes. Okay.
First of all, as an equity analyst, your real client is the investor. So when I was working at Yuanda and JP Morgan before it, your whole thought process is, how do I make things more transparent and more clear, and how do I make the right call for the investor? So the biggest change is, how does the company relate to you, being an analyst and then being someone who's basically their advisor? As an analyst, you're not working for them. And they don't really know what your motivation is. But they know you're important. Right? But when you're an investment advisor, you're part of the team. And so there's a closer relationship, and it can be a lot more fun. They can share more with you. You can strategize with them. And so that makes a big difference. Another key difference is the size of the companies. You're talking about companies with anywhere from a $500 million market cap to $2 billion, $10 billion, $15 billion, right? Versus companies that have maybe raised a total of $10 million U.S. in their entire history and have annual revenues certainly below $5 million U.S. So how does that play out? The most interesting part is, so as an analyst, you're making your forecast, right? And so let's say it's Honghai, right?
Yeah.
And they miss their earnings by a quarter.
Okay.
It's a disaster.
Yes.
Right?
That's big news. Yes.
Yeah. So what does that mean? Well, what it means is that they already know how to run their business to such a high level that people are concerned about minutia, right? But with the companies that we deal with, they're just learning the basics. So it's a lot hairier. It's a lot messier. They might have the wrong CFO.
Yes.
They may have any sort of different issues going on internally that they need to that they need to solve. Like a typical problem is an entrepreneur who brings out an innovative idea.
Okay.
Usually, he quite often can be an engineer. Engineers love to perfect the product. They're not as concerned about sales and commercialization.
No.
And so quite often, for the company to move ahead, the original tech guy needs to be moved out of that key position, and more commercial people have to move in and take over. Precisely. And that's never a pretty process.
No.
And so we sort of
never
help.
Easy either.
Yeah, we sort of help coach the company through that.
Okay. And what will be some of the factors when you look at an early stage, mid-stage company, and you decide that, hey, this could be a company that's worthy of a second look? You know, maybe if, you know, the opportunity presents itself, that we can, you know, raise some money, raise some capital for them. What will be some of the factors?
So the key thing is the management team.
Okay.
And that just takes a lot of experience in asking questions and judging really their thought process.
Okay.
Okay. The next thing is, do they have a market for their product? How big is the market?
Okay.
And have they done the math? And then after that, you want to look at the product and you want to see how quickly it can be commercialized and how strong its patent protection is. And so, you know, you could have one of our companies had a PCB technology.
Okay.
Very innovative. But it requires at least one more year of testing.
Okay.
Before one can really know if it's going to be successful at the mass production level.
Okay.
Okay. Another company had a solar technology that was just beautiful in its simplicity, but then you worry about how easily can it be copied. So one of the things they did, and this is, I think, interesting in terms of your question, is an interesting way to look at it, is they had a strategy where they set up various patent hurdles. So any little innovation that they made in the design, they patented as much as was practical, because that costs money, as roadblocks. So that before you even get into the core technology, you've got roadblocks that you possibly might hit if you try and copy.
Okay. So let me ask you, you must come across many different business proposals, you know, throughout the course of a year. And what would be a prototypical early stage and mid stage company that Peacefield, you know, with your input as advisor, that you will consider raising the money for?
There's a wide variety.
Okay.
And
are they mostly in the tech area or different?
We, I'd say half and half.
Okay.
So one of actually our flagship project is a Taiwan business.
Good.
And it's the franchise for Texas Roadhouse and for, thank God, it's Fridays. So actually these are American companies, but the company itself is based in Taiwan, and we have the franchise for these companies. So that would be one. Now what happened there is Fridays, of course, isn't new. It's been around a long time, but it was being run by the headquarters. And typically the American retail food chains prefer to franchise internationally. So Fridays sort of took its eye off the ball for a while. The business sort of just flattened out, and they were looking for someone to come in and take it over. And so there's a company called Bayshore Pacific who we advise. And so they bought that, but they needed to raise another 5 to 10 million in order to expand. Okay. So that's an example. Another example is we have close contacts with the tech startup community in Utah, And per capita, the University of Utah has more startups than any other university in the U.S., more than Stanford.
Really?
Yeah. And
that's a surprise.
Yeah.
Yes.
So we get some of our deal flow through them. It might be a company that has a technology where China is a target market,
Okay.
or they want to raise funds in Asia.
Okay.
So that's maybe gives you some kind of idea.
Okay. And John, let me ask you, just kind of turn the table around. Who are the potential, targeted investors that you will go to as an advisor on behalf of a startup and ask for money? What would be some of the things that you try to mix and match? For example, the nature of the company, whether it's in food and beverage or is in tech, would that make a difference in terms of which investors, potential investors, that you go to?
Oh, absolutely.
Okay.
So, for example, with the tech deals, we like to come to Taiwan.
Okay.
And you're in the early rounds where you're trying to raise maybe 500,000 or $1 million. You do the sort of friends and family round. So this would be close associates, people you've known for a while. It might be friends and family of the entrepreneurs themselves. But then when you're talking about the bigger raises, it's PE, it's VC, and then it's really a lot of search and find. You have to find the company that's successfully raised money. I'm talking about PE or VC.
Yes.
They have to be willing to invest. So they all have their own little specialties.
Yes.
And then they need to like the project. So there's just a number of things that all the ducks have to be in a row in order for it to work.
Okay.
But it's mainly VC and PE, and sometimes family office.
Okay. And let me ask you before we end this part of the program, John, what would be some of the characteristics, in terms of, your relationship with the investors that you would naturally think about them on the next project? What would be some of the things, for example, that they particularly, keen on the management team? Are they particularly keen about the market size? Are they particularly interested in the potential, for the technology to grow? What would be some of the characteristics that you have come across?
Wherever you spent your time in your formative stages of your career, then when you go out and form your VC or your PE, that becomes your specialty. And so it's really a matter of meeting with the VCs and the PEs, finding out, do you like cinnamon buns or do you like blueberry muffins?
Yes.
And then when I have a blueberry muffin, I go to the guy who likes blueberry muffins.
Yes, of course. All right.
I don't know if that answers your question.
Yeah, pretty much. Is experience accumulated. Yes, of course. We need to talk about something that's very, or shall we say, trendy in the investment community in recent years, which is unicorns. First, what are they? And how do you then define a unicorn offering? Please.
The easiest way to identify a unicorn is by the size of the market cap before it's even listed. So these are companies that have achieved multi-billion-dollar market capitalizations while they're still a private company. And while very little is known about them in the public marketplace. So that's number one.
Okay.
Number two would be they're usually internet or e-commerce related.
Okay.
So examples would be Uber,
okay,
Facebook and LinkedIn before they listed, Spotify. Those are some good examples.
All right. And can you give us a definition of a unicorn offering? I mean, what would be some of the recent examples that we have seen?
Okay, so recently, you've seen this year, you saw Didi Kuaishou.
Oh, okay.
You saw Xiaomi.
Okay.
You saw Uber, Spotify, Palantir. The list goes on and on.
Okay.
With new issues. Okay. And then the reason why it becomes interesting to the overall marketplace, because typically the only people who can get into these are like the big PEs, right? So like BlackRock.
Okay. KKR.
KKR, yeah, exactly. But so what happens is sometimes in order to get the attention of management, you have to take a big chunk.
Yes.
Because this is like, it's like getting a ticket to a concert or something. You want to be in the front row.
Yeah.
So to get in the front row, you need to take, say, a $100 million check size. Okay. Then you get more access to management because they want you. They need you to make that deal happen. But then what happens is a lot of times to lower their cost, these companies will spin off portions of what they bought because they really didn't want that much, right? So they're kind of de-risking.
Okay.
And so they can spin them off in special purpose vehicles to people who might buy 5 million, 10 million, 20 million. And then that's where the smaller boutique investment banking firms like us come into the picture.
Okay.
We help find those smaller investors.
Okay, but wouldn't that create a problem later on in terms of having too many people, too many investors, and too many opinions about what the management wants to do next? Wouldn't that be a problem?
They just ignore the small guys.
Okay, all right. Okay. That happens, I know. All right. But let me ask you, with the unicorns, that they normally, like you said, they don't offer a lot of information. They were not previously listed, even though they have multi-billion-dollar cap. And you also mentioned earlier that, John, that the investors are generally very keen on the project or the company being as transparent as possible. That to a lot of people, including myself, there would be an obvious contradiction. The unicorn saying that, oh, this is all I can share. But the investors say, I want more, transparency and things. How do you then reconcile the two?
Yeah, so it's got to do with the rarity factor and the desirability factor.
Okay.
And so there's only one Uber, right? And they know that.
Yeah.
And I mean, okay, there's Lyft,
yeah.
right, which is a competitor, but everyone knows
Not on
Uber.
the same scale.
Not on the same scale. And so they are famous for giving no financial information whatsoever. So what you do is you say, okay, well, what's their market position? How defensible is it? And then who are the other people who are invested in this company?
Okay.
And that's pretty much it. And then you just have to decide whether or not you can stomach the valuation.
Okay, but who's willing to be the first guinea pig to get involved in the project?
So that would be the experts. So the really big chunks go to the companies that have invested in the space before or who have invested in unicorns before.
Okay.
And, you can compare sort of how well could Facebook monetize their clicks before they listed versus what their market cap was then. You can compare how dominant is Spotify in its market compared to how dominant Facebook is or how dominant Amazon was.
Okay.
And so if you have sort of a knowledge of how to look at these, you can actually make somewhat of a intelligent decision, but you have really no idea about how and when these companies will earn money.
Okay. And some of the unicorns, like what you mentioned, Uber, have really received a lot of publicity in recent years. But from the investment community perspective, why is the market or potential investors so much fascinated with them? We understand the news reports, we understand all the, somewhat controversy, regarding the practice and things. But, why would an investor, who's supposedly basing his or her decision on purely reason and, numbers, be willing to go into it? Why is the market fascinated with it?
So I knew an investment banker who once told me that no matter how weak fundamentally the issue is, you have to create this aura of a lack of supply of the issue. Or you have to create an idea that this is a party and you don't want to miss the party.
Okay.
Right? So that's, quite honestly speaking, that's one of the aspects of these deals, is that people don't want to miss the next Uber or the next Facebook or whatever. And the reason being that is if you get it right, the payoff is huge.
Yes.
So it's not all fun and games.
No.
I mean, I got to be at the party. But there is a feeling of, I don't want to be the guy who missed it. And so that's what helps create the part of the hype.
Yeah.
But another interesting aspect of it is that for unicorns, well, what is a unicorn? It's a mythical creature.
Yeah.
Well,
the mysteriousness.
This is a really well-chosen name. Because if you went back 10 years ago, and you would say, yeah, there's going to be these internet companies, and they're going to have these billion-dollar valuations before they list, and they'll be able to raise all sorts of money, people will go, this creature doesn't exist.
No.
But unicorns do exist now. So that, I think, explains some of the excitement about them, because this is a completely new thing to the investment world.
All right. And John, based on what you know, and as far as you can share with us on the program, what's generally the investors' reaction after they've invested in some of these unicorns? Are they, overall, for example, happy, in the first 2 years of the, investment, or are they, the level of satisfaction has been declining, and then they will say, hey, I'll never do this again? What's generally the sentiment?
That's a very good question. Over the past 3 years, it's generally been very happy.
Oh, really?
Because the valuations have
really gone up.
Yeah.
Okay.
And so here's how I look at the unicorns right now. If you went back 6 months ago,
yes,
the unicorn deals that we were doing, that we were introducing to our clients, they would come out, they'd be available for a week at best, and they were filled. Okay? And if you fast forward to today,
yes,
we're introducing potential unicorn investments to investors, and they are telling us that they are hearing that there's other sources of supply, many sources of supply, not just from this round, but from previous round employees trying to sell. There's even a company, and you might remember in the old days in Taiwan when companies were about to list, and there was a gray market trading in the employees' certificates that they could get stock when invested, right? There is now a market in the U.S. that trades these for unicorns.
Really?
Yes.
That's very risky. Yeah.
No, I think it's got basis in law.
Okay.
But what it tells you is there's a certain frothiness in the market, and so I think the party in unicorns lasted about 3 months longer than the party in the listed equity markets, and it's now coming to an end.
Really?
Yeah, and it could just be because it's year end and people want to sort of take profits, or they don't want to build up new positions.
No.
But cautiousness has entered the unicorn market lately.
Okay. So in the future, maybe for the next 5 years, do you think the interest in unicorns in the investment community will continue, or is it going to be steadily declining? Since there are no more fascination about the unicorns. What do you think? What's your projection?
No, I think it'll continue to be a big thing.
Okay.
And it has to do with the rate of advancement of technology, what the internet and e-commerce and the Internet of Things enables is if you have a good idea, it can go viral very quickly. And so you're going to continue to see tremendous wealth creation for a few individuals, and then I think a harder slog for most people. And that, I think, is going to define our age for the next 20 to 30 years. It's going to be one of the more interesting things to watch, is how that plays out.
All right. John, a lot of people, talking about investment, they've heard the term angel investor. It's actually, somebody who comes in at the, the right time and making an injection of capital or, whatever into a startup. What's the definition of an angel investor?
The angel investment community is unlike any other part of the investment world. All right. And this is something that I've been learning over the past 2-3 years.
Okay.
So I spent most of my career in public equities.
Yes.
And here you're talking about, so my experience is institutions, right? So when I first started going out and looking and trying to find who are the angel investors, I expected to find PE and VC type organizations.
Yes.
That doesn't exist.
No.
The angels it's a very diverse community. First of all, what will frequently happen is an angel can be a former boss. So let's say you're the CEO of and the founder, you're Stan Scher of Acer.
All right.
And I'm one of your standout employees. And I say, you know what, I've always wanted to be my own boss. I want to found this company, and here's what I'm going to do. Right. And you, knowing how hard I work, and knowing that, hey, this sounds like an interesting idea, you want to help me out. So you say, okay, that's fine. You know what, I'm really going to miss you, but here's $1 million. Go break a leg, right?
All right.
So that's one way.
All right.
Now, another way is that if you're a capable guy, you're pretty smart, you've been working hard, and you got this great business idea, chances are you're going to be talking to your friends and family about it. So friends and family plays an important part. And let's keep in mind that the initial dollars here are quite often, when you first start up, it could be $100,000, it could be $200,000 total, not per person.
No.
So it tends to, you don't need an institution. In fact, institutions will look at it and go, it's too small and it's too risky.
Yes.
Okay. So it's typically personal money. It could be sometimes family office. And another really sort of 可爱 or cute part about the angel community is there are these angel investment clubs. Sometimes sponsored by industry associations, sometimes just a group of guys in the same industry who get together and form a club, or it can be sponsored by a university. So they'll have meetings like once a quarter. They'll invite people with business models to come in. Sometimes they'll say and vote and invest together. Or usually what happens is you have a crowded people, like it might be in a hotel and like a banquet room.
All right.
And then the people who like a given idea will follow up with the investor, do their DD, and invest or not. So it's a really very ad hoc part of the investment community.
Okay. And in terms of the differences between angel investment community and also the PE and the VCs, in addition to size, is it generally, the difference that we see is, maybe for the angel investment community, they don't really look at, some of the hard numbers, or they don't really, do as much DD as what the institutional investors like, a major VC or a major PE would do. Is that generally how you would say the differences are between the two, communities?
Yes and no.
Okay.
You still have to do your DD.
Okay.
But there's less numbers to base your DD on. So it's not as number intensive.
No.
So everyone has to have projections for the next 5 years.
Okay.
But the one thing that you know about those projections is they're going to be wrong, one way or another.
Yes.
Yeah, so you really, it's an exercise of, from experience, if you're a successful entrepreneur or if you're an investor, so an investor has seen so many business models. So they know what are the key attributes of a business model. Okay. And an entrepreneur has done it himself. Okay. So the process for an angel is just looking at this person and saying, has he done his homework? Does he have his story straight?
Yes.
Has he thought this through? And does he have the smarts and the work ethic to get this done?
To make it work.
Yeah, and that's typically, so that's DD at the angel stage, which is much, much different than DD at the more advanced stages.
Okay. And John, you are a seasoned veteran in the investment community. What is your view of the local startup community today? Because Taiwan, of course, the economy is very tech, intensive. A lot of startups, a lot of people want to be their own boss. So what is your view? What is your impression of the startup community in Taiwan today?
It's very healthy.
Healthy?
Yeah.
Very active?
Very active. There's an incredible number of startups.
Okay.
I think a lot of the younger people realize that the companies that made Taiwan famous are not growing at a fast rate.
No.
So if you want to make it big, you probably have to be creative. And so there is a real groundswell of activity in Taiwan. Okay. And Taiwan, let's face it, its strength has always been its entrepreneurs. And the younger generation, I see that being no different. Okay. The only difference being, before it might have been I'm going to make this power supply, or I'm going to make this motherboard.
Okay.
Now it's, I got an app, or I got a clean energy idea, or I have an Internet of Things idea. I'm very impressed. And the other thing is that there are mentors and people who were successful in Taiwan's miracle, the Taiwan miracle stage, who have invested, they want to help the younger generation. And these people are making a big difference.
Okay. And what would be some of the typical problems or challenges that some of these startups in Taiwan will face when they try to raise money, whether it's from the angel investment community or from PEs or VCs? What will be some of the challenges they see?
Yeah, so Taiwan has no lack of capital, right? So that's a good thing.
Yes.
So it's interesting because the angel round, the amounts aren't that big.
Okay.
So in the angel round, most companies, if you have a good idea, you can get funding. And then once you've got proof of concept and you've got sales and you're break even, also absolutely no problem.
Yes.
The hardest part is to get that 1 to 3 million in growth capital that you need at sort of your, what they call a Series A, Series B. To basically, it might be working capital, it might be hiring your marketing staff.
Yes.
It may be investing in the stamps and molds that you need to make your prototype. Yeah. Because it's still at a very uncertain stage. And your angel guys may have gone, well, 50,000 was okay, but I don't know about 500. And so that is the area where most startups struggle in Taiwan.
All right. And there are some people saying that Taiwan's economy, because of some of the non-economic factors, is really in a stage that needs to seriously think about a structural transformation. But instead, in the marketplace, John, you've been in Taiwan long enough. You see many young people want to start their own business. Yes. But they're starting with a hamburger restaurant. They're starting with a tea shop. All right, they're starting with a pot sticker store. I mean, nothing really, not enough. This is what we generally called in Taiwan in Mandarin called 小确幸. All right, it's small incremental benefits. It's a lot of people will critique the younger generations in Taiwan today. Do you think that that's also one area that you're concerned with, or is it you think the assessment is out of line?
I don't think it's fair.
Okay.
There certainly are a lot of entrepreneurs who will do that. What I see though is that you have two, I call them nonprofit organizations. That are doing a really good job of helping incubate and accelerate. And so there's one called the Epoch Foundation, who founded Garage Plus.
Okay.
And two key contributors there are Josephine Zhao and Ashley Wu.
Okay.
And then there's also Business Next. And the CEO of Business Next is Katie Chen. And so there was just an event at the Yuanshan Floral Exposition site called Meet Taipei 2015. And at that event, there were 200 booths. And you had dairy companies.
Okay.
You had solar energy companies. You had one company that allows you to take a hard drive, connect it to their product, and then you can access what's on that hard drive through your cell phone anywhere you are in the world. There's just a beehive of activity.
Okay.
The Epoch Foundation, Garage Plus, and Business Next both have mentorship programs where they take business leaders from within Taiwan and they set inspiring entrepreneurs up with with the mentor, and coach them.
Okay.
And this is the part of the Taiwan startup, the Taiwan startup culture and seen that I think is very, very healthy and very, very strong.
All right. And finally, John, I'm going to ask you something a little more on the personal side. We only have about 1 minute. You've been in Taiwan how many years? So
20 plus.
20 plus. All right. What are some of the things that you think Taiwan has changed in the past 20 plus years since you came here? And what are some of the things that have stayed the same? It could be the people, the food, the tech sector, whatever, investment community, whatever. Please.
So, although I've been here 20 years,
yeah,
I first came almost exactly 30 years ago.
Oh, okay.
So that was 1985.
All right.
So then Taiwan was still under martial law, and Jiang Jingguo was the president. Yeah. And so at the time, one of the really cool things was you walking through Taipei, you would hear all different accents from all around China.
Yes,
right?
Of course.
That's slowly faded away.
Okay.
And back then, the zhajiangmian was a bit saltier. Now it's a lot sweeter.
Yes.
There were a lot more motorcycles than cars. Now there's more cars.
Yes.
But what's also interesting is that over the years, Taiwan has become more and more and more livable.
Okay.
To the point where if you can find a good job here, people stay. And I'm talking not just about local residents, but also about expats. So amongst people who know, Taipei is a highly sought after destination as long as it's not a career killer.
No.
So you've got the MRT now.
Yes.
You've got the bike paths.
Yes.
There's a lot about Taiwan to like.
Okay.
Cycling,
all right.
Et cetera, et cetera.
Yeah, and then now with the liberalization of government regulations, we certainly welcome more, quality people who want to come to Taiwan and work and live as you did some 20 plus years ago. John, certainly been a pleasure to have you on the program. Want to wish you and your family all the best in future personal and professional endeavors. Thank you very much. Thank you for watching our program today, and Happy New Year. I'll see you next time on Macro View Television. Thank you.